What's going on, everybody? Good morning. Morning. I don't know why I said morning. Good evening. What does the yellow on my volume mean? Yeah, that's a good question. It's something new that I've been testing out. It's essentially when volume is three standard deviations above the mean. Um, yeah, I kind of had an idea and I was like, it might be useful. Um, and yeah, so far it's proven to be pretty nice to look at. I enjoy it. Periods of high volume pretty clearly shown. Yeah, I like it. Still kind of testing it though. Do I think Google still looks for higher? Yeah, I kind of took my eyes off of it after yesterday, I believe. I mean, it pretty much did exactly what we could have asked for. Taking a look at the 5 minute, I mean, it gave us everything we could have looked for, right? In pre-market, get that break above and retest of the entry. I mean, big volume bar right off the open, holding above that first target. A little bit of a flag above the moving averages, giving kind of another continuation entry there, right into your second target of the day. Yeah, I mean, me personally, I didn't have much of a reason before in it any longer than that. But it still does look constructive. You know, there's nothing real wrong with it. But bit concerning to see it just fully give up those gains yesterday so easily, especially when the market as a whole had reasonably a flat day. You know, rest of the market reasonably flat. Google was red, so early signs of kind of some relative weakness there, but not too much to be concerned about just yet. Oh man, Husky, world's different, dude. Thanks for asking, dude. Last week, I actually got food poisoning during lecture. That was what happened. And man, dude, you guys heard me at the beginning of a terrible 72 hours. That was like, that was the worst thing I've experienced in a while. That was pretty shitty. But I'm good now. Dude, I appreciate you checking in. Yeah, feel really bad that I had to end it last week. So we'll make sure we get everything covered that I want to tonight. Yeah, anything that you guys want to see that I was talking about last time or just in general, um, I owe it to you. So anything you guys want to see, I'm happy to make sure we get that covered tonight. Yeah, it was not fun. Not fun at all, but it's all good. All good now. We're gonna give it a couple more minutes and then we're gonna get into it. Any questions or concerns before we get started? Any comments? What's going on, Rudy? Good to see you. Good to see you. Just responding to a couple messages right now. But having trouble sharing these scripts from Thinkorswim. I don't know why it's been so difficult. Yeah, actually, I did take one trade. I pretty much just followed Filio's C trade. I was kind of still catching up on everything, so I decided to take C with him. Yeah, pretty much no reason not to take it. I mean, I think that alert came out somewhere around here-ish, I think, right about there. And at this point, I was looking very constructive intraday, had that flow that he called out to back. Every time frame was in an uptrend. Daily was looking good. Hourly had that recent EMA crossover as well. So that was really all I took. Took them all off right around here, right at this previous pivot. Yeah, sold them all when we see these high volume bars here. This was kind of the sell signal for me when you have this really high volume bar here. If you just zoom this in. And this is actually something I don't talk about this too much because this is kind of part of an example that I want to cover in terms of a price target. But yeah, that was it. All right, I'm going to send out one more message letting everybody know we're getting started, and we will get right into it. Thoughts on PayPal? Give me 1 second, and we will check that out. All right. Thoughts on PayPal? Let's take a quick look, and then we'll get going. Yeah, I mean, really not much to say here. These levels I've had for years, and this thing is still stuck in a range. There's not much for me to do with this one, honestly. I really don't like it. It's been lagging the entire market for almost multiple years at this point. It just doesn't really excite me. NVIDIA, all right, this isn't a charting lecture, but I will look at it just because I owe it to you guys. NVIDIA, I do like actually for tomorrow. I like to close over 900 today. Also, certainly having some relative strength after this terrible looking breakdown. I even posted this in my tab. After this breakdown, I really didn't like semis much at all, but somehow made a recovery, was able to reclaim this kind of line in the sand here, 830, 830s ish. And it's left this gap open here, nice indication of strength. And you got what pretty much is a double inside day. So 2 days trading inside of the prior day's range. Not quite last day. Undercut it just a bit, but definitely some consolidation that we have going on here. And you could even, let's see how clean we can get this here. Turn off pre-market for now. I mean, certainly getting tight here. So this is actually one of my top watches into the end of the week. I like it long. I think that'd be my preference to see this thing move higher, but yeah, TBD on what direction this ends up going. Yeah, the idea for C that I took was directly out of Tilio's tab. Tilio's been posting this options flow recently, and it's been really, really cool. So just wanted to try it with him. But yeah, couldn't recommend the things that Tilio has going on anymore. ARM, yeah, I mean, they had earnings today, so the move that we're getting in the after-hour session is all related to that. Currently trading at 96. It's not a name I'm interested in, especially after this breakdown. At least not interested long. There's not anything I like about this name. I mean, it obviously has earnings, but it looks like even after earnings, I wouldn't be surprised to see it come back down to this 80 buck area before any more constructive recovery there. All right, last question from Rodrigo, and then we will get into it. I like this question, though. Rodrigo says, does it matter if it's a regular gap or news gap or earnings? So different ways for me to answer this question. I want to say fundamentally, every gap is usually caused by the market getting something wrong. So the market had some kind of expectation and they got caught off sides. So, for example, for an earnings gap, we take a look at something like Google, right? The market had some expectation for what was going to happen on Google's earnings, and all of a sudden they got caught way off guard and found themselves on the wrong side of the trade, or where Google performed much better than they could have thought. And we get these kind of large gaps up, similar to Meta, right? Meta was kind of that opposite reaction where we got a significant gap down on the report. Where it was looking like Meta was going to perform some type of way after the report. It seemed like those estimates ended up being higher than they should have been, where we get that move lower. Generally speaking, though, when you see those gaps, it's important to note that they are a sign of strength in that direction, no matter how small or large they are. So, for example, we could even take this Meta example here. If we look at, I don't know, I mean, I'll just mark out this swing high right here. I'll mark out a couple of these swing highs. When I say swing high, I mean kind of a higher high in a trend. So that's going to be there. So a couple different swing highs here. All right. So a couple things to note. Most of these swing highs, we didn't get any significant gap higher, significant momentum through them. Here, some rising volume as we break through. But one of the most interesting kind of breakouts, I'll say, is this right here, where we leave behind two gaps back to back, right? So those two gaps highlighted there, and then end up continuing on just an explosive move higher. I mean, after we printed these two gaps from this close to kind of the day before earnings, or at least the highs, another 6% move in 10 days. So generally speaking, these gaps are absolutely a sign of strength. When you're in a positive trend and you're seeing these gaps hold open like this, and a volume pattern like this where volume is rising on the way up, there's not a damn thing that's bearish about that. So certainly something to be paying attention to. And also, generally speaking, when you get these gap ups or gap down in earnings, you'll hear these kind of referred to as maybe a power earnings gap, is kind of a common term that gets thrown around. This is the same idea, right? When you see these big gaps up or big gaps down, usually you're going to want to see or wait to see a kind of trend continuation in that direction. So Shop is a really good example, right? Big gap up after the report. We get a little bit of a consolidation after that report, and then just continued momentum higher and higher and higher. Then here, right, notice how these gaps change the trend, right? Very interesting to kind of study this here, right? We get a pretty big move down here on earnings. Not quite a gap, but trend is lower there. Here, big gap up on earnings. Trend was pretty much higher all the way until the next earnings report, where we get a big gap down on earnings, where the trend was pretty much lower. I mean, literally lower until the next earnings report, where again, we get another gap lower, which again, another indication trend is currently lower. We're going to want to see some kind of basing or consolidation before we decide to get long on this name, or at least see it pull back into some significant support, which certainly getting to that spot where it's time to start getting interested right at this volume shelf here on the weekly. But yeah, so that's how I like to use gaps. Again, all a gap is an indication of strength. It's the market telling you, hey, when you see a gap, all you need to know is that a lot of people were wrong on that day. And when people are wrong, that means people have to change the way they're positioned, right? So for example, again, right, let's kind of walk through the psychology of what's going on here. So at least for this specific gap, right? Shop is in a downtrend, lower highs, lower lows. Into the earnings report, you got this little breakdown from this support level right around that $50 area. So price is moving lower into earnings. After the earnings report, you get a, let's see, 22% gap up, right? When a stock moves 22% in a day, that is a massive move, right? No matter what you're looking at, unless you're looking at some pump and dump, some penny stock. But for the most part, when a name moves 22% in a single day, that's a really good reason for you to start to pay attention to it. And that doesn't mean get long the next day, but it's something to add to the watch list, right? It just goes to show, at least for this specific day, right? A lot of people had bad expectations for Shopify's earnings for whatever reason, right? It looked like in this specific earnings report, they were planned to earn about 0.6 or 6 cents a share when the earnings came out to be 55 cents a share. So they beat their top line there by 1,000%. And that doesn't include guidance or anything else or any other comments made on the earnings call. So beating on the top line by 1,000%, a lot of the Wall Street kind of analysts, a lot of the big funds that invest money into longing and shorting individual names got it wrong. And when big people get it wrong, that's when you start to see these kind of aggressive moves, right? Which is what this big gap is signified by. And when we see these big gaps, right, we want to pay attention to what exactly is going on here. In this case, we're gapping above a prior level of resistance, which was held on that same day, and igniting what ended up becoming a significant trend higher, right? And this isn't something that we see every time, but you look time and time again, right? Every time you get a big gap up on earnings, it's very, very typical to see that gap result in continued momentum, right? For example, Meta, right? Big gap up on earnings here, the momentum continued higher, right? Here on Meta, we got a big gap down on earnings. Momentum didn't really continue much lower at this point. So not always the case, but notice Meta here, right? Big gap up on earnings here, big gap up here, smaller gap up here, pretty much a gap down here, small gap down, but not breaking the prior lows. And then obviously massive gap up. So yes, gaps on news too, Hawk. Absolutely. I agree with you there. Earnings is just the easiest one to highlight. Certainly. So this is an example that you see repeated over and over. You look at NVIDIA, right? Massive gap up on earnings, price trades in a range for the next few earnings reports. And when it finally breaks that range, that's when you get, 100% rally. Tesla, I think, is even, another one back from 2020, right? It's the same idea. Also had news catalyzed by all those splits that were coming out as well at the time, 2 splits within the period of about 2 years. So pretty big deal there. But that's kind of the big idea on gaps. Hopefully that answers your question there. We have one question from Leonardo. How do gaps happen? Yeah, essentially, gaps, the reason that we see gaps, at least on the daily chart, is related to what's going on overnight. So that could be in the after hours when a company releases their earnings. That could be in pre-market due to kind of news or data that comes out or earnings that is released in pre-market as well. So when we see these gaps in on the daily chart, that represents something changed in the overnight session, which kind of imbalanced supply and demand. And as a result, the prices went up or down in order to meet that supply or demand. So yeah, gaps represent just overnight moves essentially. And yeah, how do gaps happen? Again, that's a very nuanced question. I could answer it in plenty of different ways, but fundamentally, the way any stock moves is a big fund bought or sold. That's ultimately what moves stocks is volume, right? Buys and sells. At the end of the day, there's a lot of reasons why people buy and sell, but that's really what it all comes down to. All right, good question here. Who is able to trade in pre and post market? So depending on your brokerages, you're allowed to trade, at least on Robinhood, I know pretty much has 24-hour trading in both pre and post market at this point. So technically, the way to answer that question is anybody is allowed to trade in pre and post market. Now, that's not the case on every brokerage. I don't know when pre-market trading starts officially for most brokerages. I think it's probably around, I want to say like 6 a.m. Eastern time. Sounds right to me, but kind of unsure on the exact time frames. But in general, if you really want to trade pre and post market, you can buy and sell equity in pre-market. Good question from Bree. Do brokers allow pre-market options trading or just shares? So in pre-market, you can only trade shares. In post-market, though, there's a little bit of nuance to it. So some options you can trade 15 minutes after the bell. So options on things like the SPY, you could trade up until 1:15 Pacific or 4:15 Eastern. So you can trade those 15 minutes after the bell. There's a couple other names that you can trade 15 minutes after the bell, QQQ, some of the XLs, those sort of things. And then there's also a couple of options that you can trade 24/7. I think right now it's limited to just SPX, but you could trade SPX 24/7. And if we pulled up the SPX chain, we should be able to see some quotes here, potentially. Well, these are all expired. Yeah, so you can see the quotes on these SPX options are changing live because people are actually trading these. You can see them get highlighted, bids and ask flutter. But yeah, if you're trading SPX options overnight, I think you got to be real mindful of the risk that kind of comes with there. Pre-market trading in stocks occurs from 4 a.m. to 9:30 a.m. Eastern, and after hours trading on the day. Yeah, that sounds about right. I just don't know if every brokerage allows you to trade all those hours. Me personally, it's not every day. I'm really looking to buy or sell shares in the pre-market session. After hours, if I remember correctly, at least how Robinhood used to work, it would let you trade, and even Thinkorswim, it would let you trade until 4 p.m. Pacific, which is 7 Eastern. So yeah, maybe there did used to be some limits on how much retail could trade, and there was some kind of areas where it was just institutions, and then some brokerages will allow you to start before or after that. All right, Viral. Last question. Is a gap the safest trading range? So a gap usually wouldn't be, I usually wouldn't expect to hear the term gap and trading range in the same sentence. Generally speaking, right, they mean kind of two fundamentally different things, right? A gap, generally you'll see when something significant has changed in a stock. A trading range is something where you'll see nothing. Generally speaking, a trading range is going to occur when there's not any significant material change in what's going on in the stock, right? There's no major reason to buy or sell at any given moment. Now, obviously, again, just like any answer I give, there's obviously some nuance to that. But for the most part, a trading range is when both buyers and sellers are in agreement on the value of a stock and kind of trade around that range. Whereas when you see a gap, there's a significant disagreement in what a buyer thinks the price of a share should be and what a seller thinks the price of a share should be, which causes that supply and demand imbalance and ultimately is the result of that gap. Is SPX and SPY the same? Short answer is yes and no. They represent the exact same thing for the most part. The SPX is the S&P 500 index, so a composite of a unique weighting of 500 different stocks. The SPY is effectively the exact same instrument, except it's just tradable. So the SPX index is generally meant to just be kind of a number, if that makes sense. And the ETF, which is SPY, is essentially the tradable version of that ETF. So for example, if we compare, oops, I just clicked on demand, that's going to screw things up. But yeah, essentially, if you were to compare SPX and SPY, you would notice that they look the exact same. The weird thing is that you can trade options on SPX and SPY, but you can't trade shares of them both. So there's certainly some weird things, but I'll just compare it real quick for you. Everything's slow now that I turned on demand. Everything freaked out. Yeah, so comparing the two here, SPX on the left, SPY on the right, there's really no difference at all. Looks effectively the exact same. I'll clean this up here. Cool. Great questions to start us all off. Like I said, I owe you guys. I ended last week's lecture a little bit early, so it was important for me to try and give you guys some of the time back, because I know that was probably a bummer for some of you and certainly a bummer for me. All right, that said, I want to get into the topic for tonight, which is price targets. And I want to start out with a couple of different examples. First off, I'm going to refer to, let's see, what is this? Option C returned. Oh yeah, I did see that, Hawk. That was a cool feature. I mean, a lot of people used to love to talk negatively about Robinhood, and some people still hate Robinhood for what they did about the whole GameStop thing. I personally couldn't care anymore about that. It didn't affect me, and I don't really give a crap about it. But Robinhood, I think, is really one of the best brokerages, at least kind of for people that don't need a bunch of unique features. They really have anything you could ask for besides a robust charting platform. But yeah, not a damn thing wrong with Robinhood. I certainly think it's better than Webull and most other things that people like to suggest, but that's just my thoughts. Yeah, gotta have that's the perfect pair, Hawk, I think, is the TOS for the charting and the short-term trading, and then the Robinhood for everything else. I think that's been my strategy, and I love it. So anyway, not supposed to be an ad for Robinhood today. All right, so I want to talk through price targets. A lot of you, or at least maybe not you in this specific lecture, but in general, a real common issue that we see that comes up is people setting unrealistic price targets, not having multiple price targets, not following their price targets, not understanding how to kind of scale in and out of trades, a whole host of issues. And it's one that we've seen again, time and time again. It's not the first time that I've seen something like this, and certainly won't be the last time we talk about it. I want to start out by bringing up a quick example of a trade idea that I posted, I think earlier this week, I think on Monday when I was alive again. Yeah. So want to talk through this idea real quick. So this was a trade idea that I had posted on Google. Here you could see I you don't have the description in front of you as well, just the chart here. But I did my best to kind of color code what all these lines are. I'll just kind of talk through it. I have this red line here representing the stop, the green line here representing the entry level, and then these yellow dash lines being different price targets. This is on the hourly time frame, and let's talk through kind of why I chose these specific price targets. Then we'll go and take a look at the chart. So set up here again, kind of the big idea behind this trade. Google, obviously, as we talked about, big gap up on earnings, indicating that a lot of people had it wrong. Taking a look at the hourly chart here, this gap ended up holding open. We also started to set a few higher lows within this hourly trend, very minor, but a few of them. And also we had some real high volume on every single one of these lows, indicating that buyers were actually purchasing or taking part in buying these lows. This wasn't just kind of a seller fueled move down. And also that's justified by we're not setting any new lows as we see this high volume at the lows. And ultimately, Google just set up in this kind of little base pattern, right? You could consider this a trading range almost from 164 to 168. And that's kind of the big thesis, right? Again, you have that positive earnings report, nice reaction to that earnings report, hourly base setting up, nice consolidation after earnings, hourly uptrend, daily uptrend, and real well-defined trade here. So that's kind of why I was focused on this name. Moving on to kind of the price targets here and why I chose what I chose. First, I guess I'll take a step back and talk about the entry and stop loss here. Entry here represented kind of the most significant swing highs that I could find. The reason that I chose this as kind of the entry that I was looking at is, if you'll notice, the last two times we came up to this level, there is a significant amount of selling volume that came in both times. So if we are to make it above this level, what that indicates to us is that sellers are no longer present at this level in this name, which is significant because if there's no sellers, it doesn't take many buyers to move price higher, right? And you have to remember the market is a whole tug of war between buyers and sellers. That's all it is. It's constant war between buyers and sellers fighting for what they want, fighting for control. One interesting thing that to kind of notice here, and I'll even take a screenshot of this so I can draw. So let me kind of make this a whiteboard real quick. One interesting thing that I want to highlight here is the fact that the first time, oh, that's disgusting. Let's make that empty. So the first time we came up onto this level, notice the amount of selling volume we had, right? So correlating this first time we came up onto that level, we got a real high amount of selling volume, which is pretty much well above the average we had gotten in the entire period, right? On par with kind of that first gap down day. So a lot of sellers present on this day, right? Now, notable, we didn't get any follow through lower. So we didn't set a lower low. Price actually came right into support and held it. So that's certainly notable. And then the next time we visited that level, not only do we have a smaller spread candle, right? And what I mean by smaller spread candle is the bar open to close is smaller, right? So that's a good indication. In addition, oops, circle's disgusting. Oops. In addition, we also ended up with a lower amount of selling volume, right? So again, correlating these two here, right? The amount of sellers present at this level had decreased in the period of a day, right? So here we had about 10 million sellers step in off this level, whereas here we had about 5-ish, a little bit less than that. So two important things to note there, right? Significant amount of sellers stepping in at those levels. So obviously it's an important spot to be paying attention to, right? The next kind of couple levels that I wanted to look out for were this gap down day, right? So this is kind of that gap entry level, 169.50. This is just going to be a significant pivot, right? It also lines up with the low of day after earnings. If we just extended this to the right here, here, let me bring up our whiteboard again here. If we just extend this drawing to the left a little bit, this, oops, this was also the low of day on earnings. So two reasons to have this as a kind of profit level or profit target, right? Number one, low of day after earnings, right? Super important. These kind of levels that are set after earnings are always going to be significant, right? After we set that gap, the low and high that buyers and sellers were able to put in mattered for some reason, right? For some reason, this is where buyers ended up stepping in. This is new all-time highs for Apple. So we didn't know why they stepped in here, that they were going to necessarily step in here, but they did. So kind of two levels to define there, and you can see how those line up with our price targets. And additionally, right, that's kind of the next pivot to be watching out for. So a lot of the way my price targets work, especially when we're trading a reversal like this, is we want to pay attention to the price structure, right? So let's say, for example, we get a trade like this, right? This is kind of what the chart looks like. This is just an example. As we're trading, right, we want to be paying attention to these levels from the trend, right? So these that I'm going to circle in green are our prior, higher, or lower highs, which are previous areas where sellers stepped in, which the way you could think about those, or the analogy to those in our real example, is here. Oh wow, that made it hard. Here. Oops, come on. Let's just copy this. Come on. So here is one of our prior lower highs, and here is one of our prior lower highs, right? So this is kind of the exact same thing, right? And I'll just simplify this here so you can see it look the same. So that's kind of a little bit gross there, but that's kind of the simplified version of the trend there. And these are our two prior lower highs. So these are always going to be areas where we want to pay attention to. One thing to be mindful of when thinking about a trend is that there are reasons that buyers and sellers step in at the pivots that they do. For example, they stepped in here at the 169, they stepped in here at the 168 level, right? Again, we don't always need to know the reason why they did that, but these pivots will matter in the future, right? A lot of people and a lot of kind of people or larger institution strategies might depend on what the trend is. And if we're below the previous lower high, that means we're in a downtrend. And as a result, they might not be able to go long, right? They might have to wait for us to get above this prior lower high and set a new high before they can actually enter long, right? Maybe it's defining their risk. So anyway, always going to be places to be paying attention to in terms of a profit target. And we'll walk through some more examples in defining those. Next, the next level that I had to find here was this gap fill level, right? So here you can see this gap from about the 170s to the 172s. This gap fill, always going to be important, right? It's, I think, pretty universally accepted that when filling a gap, reasonably common to see some kind of rejection, some kind of slowdown in price. Yeah, that's just kind of why that's there. And finally, this 174, 175 spot, this was our prior or current all-time highs. So obviously all-time highs, always going to be a key level. You've got to watch out for sellers stepping in there. So going to mark that out as a pivot. Now moving on to how this actually traded against these pivots. So I'll just pull up the hourly here. Might be a bit easier. So this is what the chart looked like. And here you can see how we traded against those pivots on the hourly. So this one here, we blasted right through, right? So 169.56, price didn't give a care to at all. And 171.73, right, which was the gap fill, was the high of day yesterday, almost to the tick, right? We were about, price made it about 3 cents above this gap fill, which, 3 cents above the gap fill. So, I mean, pretty logical there. So this is how those price targets played out. Again, looking at the 5-minute, and I'm just going to enable pre-market really quick so we could see what happened here. I started to talk about this trade idea in the beginning of lecture, but pretty much textbook how this played out. Looking at pre-market, we moved above this entry level 168, came back down in pre-market, retested it. And I mean, you can't always justify an entry necessarily on a bar like this, but very first candle of the day, we blew right through. We blew right above pre-market high, blew right through our first profit target very easily, then began to set up in a real constructive consolidation here. Let me get this a little bit better. So real constructive, just kind of standard consolidation here. A little bit of, flag, whatever, trend. I don't really care what you call it. Nice breakout of that intraday, continued moving higher. And really the biggest red flag and reason to kind of be paying attention to this profit target intraday is you'll notice some of our highest volume throughout the day came in, or at least throughout the midday, came in right as we approached this profit target. And this is why I started using this study on volume, is that you can't deny that this volume is much higher than the average, right? This volume that we're seeing here is actually 3 standard deviations above the average volume for this period, right? And I'll even turn off pre-market so it just calculates a bit better here. Oops. Cool. So as we approach this level, right, first you can see very high volume rejection off of a couple cents below that level. We push into it, we're unable to get above it. This is an indication where you should really be paying attention to your price targets. Now, let's talk a little bit about that concept. The reason our price targets exist and the reason that we have multiple is we never know what exactly the high of day or kind of top end of the move in any given stock will be, right? It's impossible to know when a stock will finally top out. It's impossible to know where sellers will finally step in. So that's why we can have multiple price targets that are essentially just good guesses on reasonable places for sellers to step in, right? We don't know exactly when people are going to hit the sell button in masses. We don't know when people are going to hit the buy button in masses, but we can make good guesses based on our price targets and perform actions in our trade in order to mitigate the risk of what could potentially happen at those profit targets. And that was a really cryptic way of me saying when we approach our price targets, we should be reducing our position. There is no reason not to reduce your position size when you approach these price targets. And this is one of the most powerful things you can do as a trader. And it's very, very useful for kind of maintaining your trading psychology, because let's talk through kind of the thought process here, right? Let's say, for example, you plan this trade before market hours, after hours, whatever. So you've identified before you even enter the trade where you should enter, where you should stop out, and where you're expecting to sell some of your position, right? That's what you should be doing. That is very standard. That is exactly something that should be done when planning trades. Then when you go to execute your trade, right, you purchase whatever you need to purchase when price breaks your entry or comes to your entry. And then it's all on you to manage that position. And people find themselves in situations where they can't manage their positions accurately, or they're way too emotional or way too impatient with their winners. And what obeying a set of price targets will do for you is it essentially allows you to reduce your position as you go into profits, but also maintaining exposure for a move that continues in your favor. So, for example, on a move like this, right, where the first bar of the day blasts right through your price target, very next bar you come and retest it, maybe you don't trim on this first move, right? Maybe you don't trim right here, but as you come back into this level again that we set, like this previous high a day, usually wouldn't be a bad idea to trim, right? Potential double top here. We still have real high volume, could certainly turn around here. And this isn't a level that we had going into the day. So not always a bad idea to reduce there, but completely reasonable if you didn't, right? And again, obviously we're looking at this in hindsight. Anybody can look at a chart in hindsight and tell you what to do, how you should. But we had these levels in advance, right? This isn't like I just threw these levels on the chart. We came into the market knowing these levels were going to matter, right? You could see the chart that I posted was a day before this was even happening. So I think one of the most important things to probably take from this lecture, if you don't remember a single thing, I hope you remember this. The one problem that so many people have in trading is that they are impatient with their winners and patient with their losers. Everybody needs to turn that around and be patient with winners and impatient with losers, right? And the way to do that and the way to actually maintain your psychology when sitting in a trade that is a winner is by reducing your position at price targets. So the way to manage a trade like this essentially is as price comes into your first price target, trim some of your position, right? If you have one contract, two contracts, three contracts, sell a couple, right? If you have three contracts, sell one or sell two, right? Then as price continues to move higher, there's no reason to sell here, right? There's no reason to cut this trade. You're in a full uptrend. The 9 is above the 20 EMA, right? Completely positive trend, right? On the 5-minute, completely positive trend on the 15-minute, completely positive trend on the 30-minute. There's no reason to be short. So as a result, you hold your position, right? You trim some at your first target. Then once you trim some of your position in profit, you set a stop above break even. Now you are in the best position a trader could possibly be in, right? Now you've made some money on your trade, you've locked in some profits, and when you set your stop in profits, you are no longer asking the question, will I make money on this trade? But rather you are asking yourself the question, how much money will I make? Which is the best position any trader or any person can be in, right? Think about that, right? Think about if all you had to ask yourself is, okay, this is great. I am 100% going to make money. How much am I going to make, right? That's an awesome question to have to think about, right? That's a great dilemma and a great situation to put yourself in. And that should be the goal of every single trade is getting some of your position off at that first price target, setting your stop in profits, and then sit back. Sit back, monitor the trend, and if price breaks back below your price target, that should be your stop. So for example, once you see once you see price action hold this target, your stop should be on a price action close below this 169.56. So you're guaranteed to make money, right? Guaranteed. You've already sold some in profits. Your stop is now in profits. You will not lose money, which that is an amazing position to be in as a trader. And as you continue to monitor this trend throughout the day, you want to be paying attention to how price reacts to key levels that formed intraday previously, right? So for example, this high of day is important, right? So if you'd have this level marked intraday, right, you can take a look and see how price reacts. Notice how we come up to that level intraday, but not really any crazy volume, right? Some increase in volume here, but the trend is still positive. We're still got some room to our price target, so not any reason to be too crazy concerned there. Then as we move closer to our next target, we get an anomaly, right? We get the highest sell volume all day, really since pretty much the open, with a long upside wick, a bear bar closing near its low. This is your clue to sell more of your position, right? We have come into our next price target. We're cents away from the next price target. And the market isn't always going to come to these targets to a tick. Your levels won't always be perfect. And some of the best advice I have ever received about trading and levels in general is when trying to trade your levels, sometimes the best thing to do is squint. And if you squint, right, this gets a little bit blurrier and this wick is touching this line. And it's like, okay, well, we got the high sell volume of the day. We got a bear bar closing near its low. This is either a good time for me to sell the rest of my position or trim some more and set a new stop, maybe below the moving averages, maybe below this prior high of day, right? Couple ways to define it, but you should ratchet your stop up. Every time you sell some of your position, your stop should move up as well. So you protect more profits, lock in more money, and ultimately, right, at the end of the day, your goal as a trader is to get yourself into these positions as much as possible. That's the big idea. So that is the ideal way to manage any position, right? And Google is just a great example because I already have the profit targets going into the week. We got a couple questions, so I want to address some of these. Can you move your stop with the order bubbles? Yes, you can. If you have the sell stop order on screen, you can just drag it up and drag it down. If you have time to talk about why us as traders are patient with losers and possibly the psychology of overcoming that, and how to identify you're in a losing trade. Very excellent question, Jax. So why are us as traders patient with our losers? Well, it's not necessarily us as traders, but rather it's us as humans, right? Humans don't want to be wrong. And as a result, when we are wrong, we want to find reasons to justify ourselves for maybe doing the wrong thing. This is an example that's really well shown in something like people who steal, like thieves. For example, if you're somebody who has stolen in the past or knows somebody who steals, you'll probably hear them making some kind of justification like, oh, it's okay that I steal from this person because they're rich, or it's okay that I steal from this person because it's a company, so it doesn't matter, right? But stealing is always wrong. And no matter what you say, it's still going to be wrong, right? And you saying that just makes yourself feel better about it. So us as humans look for reasons to justify and make ourselves feel better about doing the wrong thing. You could extend that example to probably plenty of different things. I mean, that's the first example that came to my mind, but I guarantee there's plenty more examples. So it's kind of hardwired in human psychology for us to think that way, for us to justify doing the wrong thing rather than focusing on doing the right thing. So overcoming that, number one, you have to identify that behavior in real time. If you can feel yourself trying to justify reasons you should be staying in a trade when you know you shouldn't be doing that, that's something to be mindful of, right? And that comes down to how you behave as a person and as a trader. One thing that's kind of a surefire way to tell you if you're wrong and it's time to get out is having a stop loss before you go into a trade. So me, for example, my stop was this 167 level. It was the prior higher low that was created intraday the previous day. It was about a 1 to 1.5 risk to reward, so decent stop, could have been a little tighter. But the way that I would have defined this trade is if price broke below this 167 level, I would have sold, right? Plain and simple, the trade is over, I'm wrong, right? We're setting a new low, that's it. My trade's no longer valid. So having a kind of binary way to know if you're no longer wrong is a great way to help you overcome that, because now you have a concrete parameter on how to identify if you are in a losing trade. So setting some kind of stop loss or setting some kind of invalidation to your trade will certainly help you overcome that. And every trade should have a reason you're in that trade, right? If you're in a trade for one reason and one reason only, and for some reason that one reason is no longer true, which you should usually have more than one reason to be in a trade, but to simplify things, if you have one reason you're getting in a trade and that one reason is no longer true, you should get out of that trade because you have no justification for being in that trade anymore. Did that answer your question, Jax? Would I share how to create the green red color band? Yeah, so I just got a DM about that. I tried to share the study, but it didn't really work. It's from a trader called Ripster, I think is the name. So I'm just going to post the website right here that you can get it. I don't know which one it is. It's been so long since I downloaded. I will say I don't endorse anything on that website, so just be careful, clicking links and stuff. I haven't actually clicked the links myself to find, but yeah, it's just an EMA cloud. Yeah, exactly. LT. You could just look up any EMA cloud script and it's the same thing. But for some reason, I'm having trouble sharing studies from my Thinkorswim. My links have been broken like every time. I don't know why, but it doesn't work for me for some reason. But yeah, if you just look up EMA cloud, you don't need to go to that specific website. If you just look up EMA cloud, Thinkorswim study or Thinkorswim script, that's all this is. And I actually really like this. I've just started to use it, and it makes it real easy to determine what the trend is, right? If the cloud is green, the trend is up. If the cloud is red, the trend is down. That's it. So if your entire trade is based on a continuation of trend and the trend changes, you probably shouldn't be in the trade anymore. Great questions, everybody. Sergio, never heard about squinting. You like that? Yeah, that was actually some advice I got from Shark like 2 years ago now. Maybe even 3 at this point. Yeah, great advice. And it really is kind of a reality check, right? Trading, we think that we have all the best information, but in reality, our levels could be a little bit off. They could be a couple cents high, a couple cents low, and we don't know if we're always perfect. So sometimes it helps to just kind of squint and yeah, I mean, you don't actually have to squint at the chart, but it's helpful to think that way, at least in my opinion. All right. Any other questions, comments before we move on to the next example? Rudy's looking good. All right. Appreciate that, Rudy. Happy to hear it. Everybody feeling good? Is this all making sense so far? Hopefully a little bit better of a lecture than last week. Last week was brutal. All right. Yeah, much better. Glad to hear it. GameStop looks pretty interesting, huh? No, what the hell is going on here? What would I need to see to take a trade? Yeah, I could talk through that a little bit. My strategy is generally pretty simple. There's a couple things that I like to look for in a trade. There's really two types of trades that I look for, which can be generally summarized as I'll just say a bounce trade and a trend continuation slash breakout trade. Each of those trades have different types of parameters that I need to see in order to take them. For a bounce trade, generally what I'm looking for is overextension to the downside, which was something that we got on the SPY a few weeks back, which was something that I talked about. So for a bounce trade, I'm generally looking for overextension of the downside. I'm generally looking for high volume coming in. It's can be commonly called exhaustion volume. So high volume to the downside. Let's see. Yeah, high volume, downside extension. High volume, downside extension. You want to see price coming into a strong level of support. Ideally, the larger term trends are still in the direction that you are trying to essentially get involved in. So in the case of the SPY, long-term trend is still up on the weekly. So you're not really fighting the trend. We're coming into a strong level of support, 20 EMA there on the weekly. But that's my general philosophy behind bounce trade. So again, to summarize, looking for high volume at the lows, overextension. So kind of a move that came too far too quick. Longer term trend is still in the direction that you're looking to trade in. And I think I already said into a strong level of support, but yeah, that's really the big idea there. Also, ideally, you want to get involved in names with relative strength. So that's kind of my criteria for a bounce trade. For a trend continuation slash breakout trade, there's kind of two things that I look for. Well, that's not true. A couple more than two things. Number one, I want to see some kind of consolidation, generally speaking. Some kind of consolidation results in a decreased options premium. And it generally results in, it shows that a move is brewing, right? So something that I like to see, you want to see some kind of consolidation. I want to see multiple reasons for the trend to be in that direction. So I like to see it EMAs trending in that direction. So for example, something like the SPY, we're getting the 921 EMAs crossing positive, or excuse me, 1020 crossing positive. So I'd be more focused to the long side, especially if we come back down and retest this spot. So that'd be a trend continuation trade if we got some kind of consolidation, something like, that ish move down to the EMAs. That'd be something I'm looking to get involved of. I also like to have well-defined pivots in those trend continuation trades. So what I mean by that is real easy levels to structure the trade off of. One that's comes to mind is Google, right? We have the trend continuation trade, positive momentum. We have relative strength. We have real well-defined levels. I mean, everything. Essentially, Google is kind of has it all, right? And I think another one that kind of has it all right now is Dell, which is one that I tried a long time ago. I tried to get long, I think here, which ended up being a really bad trade that did not go well. But another one coming back to the highs now that looks ready to do something a little bit exciting. But yeah, those are kind of the two general things that I look for. A lot of examples of this are all in my tab. So you could see a little bit more detail in terms of some of the things that I look for, but my trading strategy is essentially documented in every idea that I post. It's all meant to be educational in the things that I post in there. So everything that you see me post, welcome to ask questions, comments. But yeah, my strategy is reasonably well documented in there. The stops look so much easier to set pre-trade using TOS. Don't think you can do that via Robinhood. Robinhood, you actually can set stops. Well, not pre-trade necessarily. To set a stop before you enter in Thinkorswim, you'll have to set like an OCO bracket order. I usually set stops after I take the trade, but I don't ever set, like for example, if I'm not in profit, I don't usually set a stop loss order. So I keep my stop off the books and keep it mental, because generally speaking, my stop loss is based on when the trade is invalidated, which is a price level. So I'll usually just be monitoring the chart or setting alerts on that price level. So if price crosses below that stop loss level, at that point, I'll stop out. The only time I put a stop loss on the books, and what I mean by that is put in like a stop limit or a stop market order, is when I'm in profit. So for example, the way I manage a trade today, actually, which was it was pretty much me following an alert, following Tilio's alert. Great trade by him. All credit to him. All I did was click a button and manage it myself. But the way I did this one was essentially, let's see. I believe I set a stop once we broke through this high here. So the 62.6 area, we broke through this high. And what I did is just set a break-even stop. I didn't trim yet, but I set a break-even stop. So at this point, the trade is guaranteed to win for me. So I know the trade is no longer invalid. I set a stop at 62.6, or excuse me, I set a stop above my break even. So no matter what, I make money. So I have to care a lot less. And again, psychologically, that puts me in the best position I could ever be as a trader, right? I'm not asking myself the question, am I going to make money? Because I put my stop in profits. So now I know I will make money. How much am I going to make, right? And everybody should be able to agree with me that that is an excellent position to be in. And then I took a trim right around this previous pivot here, which should make sense to everybody. Again, previous swing highs here. I think also Tilio provided this one in the alert. I think he said something about this 90. Yeah, he said 62.9, so a bit lower. So I took a trim right around there. And I ended up exiting the entire position once I noticed this high volume rejection off this level, which, might be a mistake, but I didn't want to swing it. So ended up exiting, I think, on this bar. Once I saw this close, I saw volume kind of ramping into the close, high volume rejection off this level, and these high volume wicks off this candle, off this prior level. I didn't want to risk it much. How far behind do you put the stops once they're in profit? Yeah, LT, to be honest, I don't really have like a specific, I'll call it methodology, like rooted in science for this. The way I did it is essentially I was in this contract at, I should be able to recreate how I did it. Let me pull up the option chart. Let's see, it was 24/05/17 C63. So let's talk about this. Let's go here, here, and 5 minutes. All right. So the way that I traded this, let's see. So I got in around 74. So right here, 74 was my entry. My first here, let me just go look at my order history really quick. I'll be able to tell you what I did. I will tell you exactly how I managed this one. Let me just look at my orders. Don't remember the specific things I did. So let's see. All right. So I set an order at 11:51. So, okay, so yeah, like I said, 11:51, I set the break-even stop. So break-even stop was set at 75. So a dollar above my break-even was set right there. I'll just highlight this level so we could see when I did that. Hopefully this isn't too confusing. Then price moved a bit higher. So at 11:56, I moved my stop up to be in profits to be at 0.79 here. So just locking in gains, essentially just guaranteeing I'm going to make money here. Then my next order was a trim, and I trimmed at 0.9, which is right here. So this is a trim, and I'll mark this with a red oval. That's a trim. Oops. Trim there. And so since I trimmed at 9, after that, I moved my stop all the way to 0.85 because I really wanted to lock in maximum gains at that point. So really, I'm just trailing the contract by about 5 cents in this case. And then ultimately, I sold the rest for 8.6. So right around that stop. But that was really how I handled that one. And yeah, I think I mentioned it. I did trim half here. So I trimmed half my position here. And then I ended up stopping out of the rest at about 86. So in this specific example, there wasn't really any necessary rhyme or reason to it. I mostly just raised my stop up as price continued higher. So price moves higher, I ratchet up my stops, and essentially I'm just protecting those gains. But I'm making sure to not keep the stops too tight to where I just get stopped out on any pullback. I'm essentially just moving my stop up slowly, right? So I set that first break even stop, then I set a little bit deeper in profit stop, and then I trimmed, then I moved my stop up again, then I sold the rest. So that was kind of my workflow. Again, not really a science to it, at least on this specific trade. You could have a bit more of a science to it. Like, for example, on Thinkorswim, you could set what's called a trailing stop, which will essentially automatically follow the contract price up. So you could set like a fixed width trailing stop. So for example, if you set like I don't know, like a 10-cent trailing stop, every time the contract hits a new high, it's going to move your stop up to be 10 cents less than the new high. So for example, the way a 10-cent trailing stop would work here is if my entry is 74 and then the contract hits 84, my stop is 74. When the contract hits 93, it's going to move my stop to 83. So it's just going to continue to ratchet up my stop automatically. It's essentially doing what I was doing manually. So again, right, there wasn't necessarily a rhyme or reason to how I was keeping the stop loss, at least on that specific trade. And also, it's important to note, I don't always do that, right? I don't always ratchet up stops like that. Me personally, I wasn't able to like manage this trade super directly. I mainly just set a couple alerts and walked away. So I wanted to just make sure that if something happened while I was away, that it wouldn't be a big issue. And yeah, just protecting the profit. So yeah, that's a big idea. Great question. Any other questions, comments? I'm really happy with this lecture. Went so much better than last week. How's everybody feeling? Is everybody understanding the kind of benefit behind having profit targets? Is everybody understanding how you should be managing your trades as price approaches those targets? Is that all generally clear? Do you need more clarification on anything that we covered today, or how are we feeling? Just like anything, right? All this is going to take practice, right? But at the end of the day, all a good price target is just a key level, right? It's just a support and resistance level. And figuring out good support, good resistance just takes practice. You got to just draw some out. And our team is all here to help. So take advantage of us. If you guys want us to take a look at one of your charts, send it over to us. We'll review it, let you know if we agree with the support and resistance, think you got too many, think the level's wrong, think you could do something better. We're here and you're paying to be here. So take advantage of what we can do for you and send those over. Awesome, Jax. Do I think I'll redo last week's lecture? Honestly, Husky, I told Archon that I was gonna do last week's lecture this week, but he didn't do it. So I'll make sure. I'll tell him right now to make sure. Cool. It will get done, Husky. I just asked the question now, so it should be in there. Oh, look at Empanada's in here. What's up, Empanada? He's got the study too. Thank you, Empanada. Thank you. I don't know why I can't share my studies for some reason. Yeah, I think Empanada, you also have the EMA clouds too. So can I show how to put the stops that's trailing? I can sure try. It'll be a little bit hard since the market's closed. Um, let's see. I'll boot up on demand. We'll do some paper trading here. Let's see here. So let me go into here. All right, so I think this is running. All right, so the market just opened on June 3rd, 29th, 2020. Let's see, super laggy right now. This is lagging bad. All right, there we go. Getting some updates there. This is trying to load. It's gonna blow up my computer. All right, so let's say, for example, I buy 100 shares of the Qs here. So I'll just click a buy market. See if that goes through. Oh man, laggy. This is brutal. Why is this not working? All right, so we got that position of QQQ. Now we should be able to go, oops, let's go into here. So custom, let's get the custom order open. Man, this is not happy. I can't even open this up. Here we go. All right, so let's expand this. Okay. What the hell is going on? All right. So we don't want to do that. Wow. Here, maybe we need to go into positions. That'd be a bit easier than trying to look at it here. All right. Create closing order. And then we should be able to change this here. Come on. Can I not open this up? This is not going very well. I'm wondering. Huh. Here we go. Okay. So this is not giving me what I want to have here. Here, let me go back from this. I don't know why it's not giving us the trail stop. What? I'm pretty sure that it's usually just has this trail stop here. I think maybe it's just not available in on demand, but pretty much, I mean, you kind of saw how I got here. So you just get to like the standard, you get to the standard like order count confirmation window, which is here, and you should be able to just change this to stop trail stop. It's like TRL STP or something, and that should just work. But I guess for some reason I don't think I think it's just not available on demand, but that should that should get you where you need to go. So you should just be able to do that and select trail stop, and then you can configure from there. And then also on mobile, you can just select it. So like when you're sending a standard enter or buy or sell order, trail stop's just a standard option. Oh, you found it, Armando? Okay, cool. Yeah, it should just be here. I really confused. I've never actually tried setting a trail stop and on demand, and I guess it's not. Okay, cool. It's there. All right. Yeah, I don't know. I don't know why. Maybe let's see. Maybe I could make it show me one here. I don't know. Anyway, we tried. Cool. Well, I appreciate everybody's time. I'm going to call it for the evening. But again, thank you guys all so much for being here. And thanks again for bearing with me last week. That was really unfortunate, but happy everybody's back. And yeah, great turnout tonight. Really appreciate you guys all being here. Next lecture, we'll do advanced technical analysis. We'll be putting all these concepts together. So we owe it to Husky to give him what he asked for last week. So appreciate you guys all bearing with me. And I will see you all next week. Thanks again, everybody, for your time. Always much appreciated. See you on the next one.